FMOCstrategy.com.
Hi, this is Chris again, looking at the upcoming Wednesday, July 30th trading session. In front of you, I have the economic calendar. You can see that Asia is, in fact, going to be fairly quiet with just a Westpac consumer sentiment out of China. Pretty low impact. Really can't imagine that producing much in the way of sparks in the marketplace. Japanese vehicle production, of course, won't be a huge thing either. We do start to see a little bit in Europe as far as pickup in importance. UBS consumption indicator out of Switzerland is medium. Truthfully, that's going to affect the Swiss franc, if anything. The KOF leading indicator is kind of the same thing. It's almost like the beige book in the United States. It can have an effect on maybe the SMI or the Swiss franc. Truthfully, though, probably not major market moving events, but something to pay attention to regionally if you happen to find yourself trading the franc or the Swiss indices. Going into Britain, not much, but you can see the Eurozone has quite a bit going on during the day. We have economic confidence, probably not a major market mover unless, of course, we miss drastically. Something below 101.9 significantly might get the market moving, but really, at this point in time, it's probably going to take a back seat to consumer price index, the CPI out of Germany. That is much more of an indicative indicator as to what could happen in the DAX. And the euro, it's expected to be at 0.8%, previously was at 1. This is a year number for July, so we'll have to see exactly how that plays out. A big miss there will be negative for the euro and the DAX. Probably have the seller stepping in. As I scroll down, you can see that we have GDP second quarter out of the United States, ADP employment change, which typically isn't as reliable of an indicator as it sometimes is leads the market to believe, because although the number, and this is a private company out of the United States, suggests that 230,000 hires during the month of July, a lot of times people use it more or less for direction. So, for example, if we get 400 on this, that would be extraordinarily bullish. People would begin to think that the employment numbers coming on Friday would be bullish, and that should be very strong for the stock markets in the United States, as well as the US dollar. That being said, look for a significant hit or miss, probably to move the indices in the similar direction. If we miss significantly, say we get 150, for example, that's probably going to be somewhat negative for the NASDAQ, the Dow Jones, the S&P, etc. You can see that we go later into the session, and we have, without a doubt, some market moving events with specific markets. If you're trading oil, of course, inventory's number is going to be important, as it always is. But without a doubt, in my opinion, I think that the FMOC rate decision is without a doubt going to be what people pay attention to the most. And the thing is, we have to question whether or not it's not a question of whether or not we're going to see a rate cut or rise. That's not really the question. It's going to be the statement. What do they say? Is there anything in the wording that leads people to believe that the Fed is going to raise rates sooner rather than later? This will be a massive market moving event. So having said that, it's very likely we could get a little bit of some hiccups here and there, but this will be when the real action picks up, at least in the United States. Any hint of rate moves will more than likely weigh on the stock market initially, and then a lot of times you'll get a reversal because people freak out. They don't have the cheap money, and so they start selling stocks. But at the end of the day, money is still cheap, even if they were to raise the interest rate. It's still only 0.5%. Plus, the idea is also that if they have to raise interest rates, that probably means the economy is doing better. So look for an initial knee-jerk reaction. But after that, a sell-off could very well end up being a nice buying opportunity in the U.S. indices. Speaking of the U.S. indices, you can see that the S&P 500 initially tried to rally during the session here on Tuesday, but really just kind of fell right out of bed and tested the bottom of this channel. I don't expect much in the way of movement before we get the Fed minute, or the Fed announcement, excuse me, but we probably will get a little bit of a bounce off of this support just simply because of the support. The announcement could be very bullish or negative for the market. Truthfully, probably better off waiting to see what the reaction is. It becomes very illiquid at that point in time. But again, all things being equal, it looks like we're in this uptrending channel. And even though it's a very bearish day, we didn't really change that. So I still think that there's going to be some buying pressure. And even if we broke through here, you could still make an argument for like 1950 being a bit of a floor. Also, non-farm payrolls on Friday, and that will be just as important, if not more so. Looking at the FTSE, you can see we tried to rally during the session on Tuesday, but turned back around at 68.40, which was basically the high from a couple sessions ago. Formed kind of a shooting star. I still think there's plenty of support below. I just think we're going to chop in a slightly upward bias. Short-term pullbacks could be buying opportunities, but they would be short-term trades at best. Looking at the euro dollar, you can see we continued the downtrend. Things are really getting kind of ugly in this pair. Truthfully, though, I think there's a pretty significant floor at 1.33. Short-term rallies will be sold. I don't think we go below 133 anytime soon. I think the market will probably react drastically to the non-farm payroll numbers. But at the end of the day, my observation, non-scientific observation, has been over the last couple of years, the euro dollar simply just slices around during the non-farm payroll announcement. A lot of times doesn't end up doing much. I think we're going to drift lower to 133 between now and then, and therefore I think short-term rallies are nice selling opportunities. And looking at the dollar yen, you can see we rose during the session on Tuesday, breaking above 102, but there's a little bit of a resistance area here. This is a very sensitive market when it comes to the non-farm payroll numbers, so I'm hesitant to get involved until we see what that ends up being. Plus, you're kind of in no man's land here. Really, it's a 50-50 shot as to which direction we go towards 103 or 101. So I personally will be staying out. And that is a look at the upcoming Wednesday, July 30th trading session.